Getting ready to buy or sell a home in 30, 60, or 90 days? Then check out bundleselect.com to find out how you could save 20% or more on your entire transaction. Save on real estate, lending, and title. With bundleselect.com, technology and a personal concierge are at your service to save you time and money. Bundle Select's hand-picked team of experts will compete for your business, so you'll save thousands of dollars by bundling all of these services. BundleSelect.com gives you all the control, including using your own realtor. I'm Joe Kuchera with Real Estate Radio Live, and I have been on the radio educating consumers for years. By bundling services like real estate, lending, and title, you could save tens of thousands of dollars. Act now, and this new model could save you money on your move, lower your interest rate, or cover your closing costs. Visit bundleselect.com. That's bundleselect.com.
The estimated minimum savings are based on a comparison with a national average. Individual results may vary, and the estimated savings are not guaranteed. Bundle Select Inc. is a licensed real estate broker. California Bureau of Real Estate Broker license number 004666902.
Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Kuchera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Kuchera.
Good afternoon. Welcome in. Joe Kuchera with Real Estate Radio Live. Thank you for those that are watching us live on Facebook. We appreciate following the feed and continue to get more and more information out to the consumers. Remember, our goal and objective is to educate and inform. We'll continue to allow you to have many different vehicles to do that, to watch the show, listen to the show. I'd like for those, just before we get started today, before I introduce my guests, to be sure to download the podcast. That way you can listen to the show at your convenience anytime you like. You could find that podcast at many different locations. Of course, iTunes. Type in Real Estate Radio Live. You could go to our website, which is RERL-1524-Cost. Stitcher, iTunes, any of those type of places you could find our podcast. For almost 8 years, just a reminder for those that may be just watching the show or listening to it first time, the focus of our show has been education and information. What we do is try to have great guests on like we do today, content, information to share with you, the consumer, that makes you a more wise consumer in and around the area of real estate. And that covers a lot of areas: buying, selling, tax advice, legal advice, financial planning, all kinds of different aspects. So we'll continue to do that. Lastly, before we get started, if you need to reach me during the week, 408-838-9060 or email joe at reradiolive.com. All right, let me introduce my guest, who I'm pleased to have today on the show. Yonah Weiss is a cost segregation. Good to have you here today with us.
Thanks, Joe. It's a pleasure to be here.
It's a pleasure.
Thanks for having me.
Yeah, I've been looking forward to this show. Anything interesting topic, cost segregation. And so what I'd like to do first, if I can, Yonah, is if you could just give our listeners, take a minute to give your background and then kind of your current roles and responsibilities, what you're doing today, and then we can get onto our talking point regarding the cost segregation.
Sure, absolutely. So a little background about me. I have trained as a teacher for many years, over a decade, at the collegiate level. And I recently got into real estate investing a few years ago when a friend of mine offered me a job in a commercial real estate brokerage, and that kind of got my feet wet into mortgage brokering, got my feet wet into real estate for the first time. Mm-hmm. And from there, he and I actually decided to do a little investing on our own and doing some single-family fix and flips, mm-hmm. which was kind of getting involved in that. I got my real estate broker's license and wanted to just learn everything there was about real estate. And recently, I've been following those investments. I got involved with an amazing company, Madison Commercial Real Estate Services, which is based out of Lakewood, New Jersey. It's a national company, deals with a number of services for the real estate investor, including title and CAM auditing, lease abstracting, these kind of things for bigger retailer investors, commercial investors, and the cost segregation team, which is the area that I work for as a business director, reaching out to new clients and doing a lot of this, teaching and, continuing in my role as a teacher in the real estate world and enjoying it.
Very good. Well, thanks for being on the show again. So give us an idea before we get started, Yonah, about what is the kind of, you could just describe the basic premise of cost segregation for us before we get underway.
Sure. Everyone knows that every real estate asset, the IRS gives a deduction called depreciation.
Right.
Depreciation is one of the most beneficial aspects of real estate investing. It's overlooked a lot of times, but it's just a pure tax write-off to lower your income tax liability, allows you to keep the cash flow going.
Mm-hmm.
So cost segregation is an interesting name, first of all. I don't know why the IRS gave it such a weird name, but it's the ability to accelerate those depreciation deductions instead of waiting 27 and a half years for a residential or 39 years for a commercial property, which is deemed life of that asset. The IRS allows you to allocate certain aspects, and that's the segregation part of it, allocate certain assets within the building, within the property, inside and outside, and allows you to take those deductions at an earlier time instead of waiting all those years.
Interesting. Okay. Very good. Why is it that more people don't know about this or hear about it? Now, is it something that they'd rather not, or it just hasn't been mainstream yet, or a lot of people don't know about it? What is the reason behind that?
One reason, I think, to answer that, and it is a question that I grapple with on a daily basis as well, I really don't understand why more people don't know about it, because it's such an amazing tool, a cash flow tool, a tool for investors to keep their money in their pocket, really, so they can continue investing it.
Right.
Instead of paying the taxes.
Right.
Lowering your income tax, at the end of the year, everyone gets an income tax bill. Our goal as real estate investors is to try to keep that to a minimum so we can use those funds to reinvest.
Right.
I really don't know why people don't know about it. It could be because originally, when it was initiated by the IRS in the mid-1980s, it was geared more towards larger commercial investors.
Mm-hmm.
And so they had the incentives, whereas the individual or the smaller real estate holdings didn't have access to the tools to be able to take advantage of it. It was originally done by large accounting firms. They had engineers on staff, and we'll talk maybe a little bit why it requires an engineer to conduct a cost segregation study. And it was really, relegated to them, to these larger firms, and the cost was really through the roof.
Got it.
As years have passed on, we've seen benefits already from anyone who has an investment property purchased for over $1 million, which really does cut out a lot of the residential single-family investors and people who are investing for longer than a couple of years. It's more of a long-hold kind of thing to get the maximum benefit out of the cost segregation.
Okay. So
those could be some of the reasons.
So this applies to residential and commercial?
It does. It applies to residential and commercial, excluding one's personal residence.
Got it.
Right? Depreciation is not a deduction given for one's personal residence.
And so
investment.
Got it. Yonah, go into the details of the study. When you say the cost segregation study, kind of take us through the steps of what that means. So if we just have, persons watching the show, listening to the podcast, are thinking, I wonder if this applies or if I could apply this technique or this process. Let's just say they have a piece of commercial property. Take us through the steps and what they would need to do.
Sure. The first step would be to contact your accountant.
Okay.
Right? We work with accountants. We are not an accounting firm. Our firm is a cost segregation firm who work with accountants across the nation. The first thing to do, speak to your accountant to see if this strategy is something that could be beneficial to you. Mm-hmm. And if they tell you that they really don't know what it is, that's a surefire sign that they're not so familiar with it, and it's probably a good idea to do a little research on your own.
Okay.
And I have found that a lot of accountants really are not taking advantage of this simply because it's not in their bucket. It's something that requires an engineer to do, and a lot of accountants just can't be dealing with it. So they'll just overlook it and won't suggest it to their clients. They'll need the clients to take the first step. So that first step would be to, discuss the accountant and learn a little bit about it, reach out to someone like myself or another firm. There are many national firms that do this. Mm-hmm. And what we would do is take some simple information about the property, when it was purchased, how much it was purchased for, what's the address, so we can gather some square footage, some information about the property to see what the potential tax benefits would be. And then we would make an estimate, a feasibility analysis, and those numbers would be able to tell you whether it makes sense to do it or not. Those are the first steps.
So you get an engineer. Is that what you said? You need an engineer to do?
That's right.
Okay. I know it probably depends on the location, the building, et cetera, but what does something like that cost? So I'm assuming you're making an upfront investment if it looks like something that's practical, or if it looks like something that you could benefit from. There's an upfront cost, is that right, for the study, and how does that work?
Yes,
okay.
That's correct. Usually there is. Now, the benefits when looking at the property will strongly outweigh the costs in doing the study. So a cost segregation study used to be, they were accounting firms, and there are still accounting firms that are charging $10,000, $20,000 for such a study, whereas a firm that focuses on it, like ours, and many other firms like that, have engineers on staff, do this full time, will charge anywhere from $3,000 to $5,000, $6,000 for a study, looking at benefits, upwards of hundreds of thousands, if not millions of dollars of tax benefits. The costs clearly, don't come in comparison to the benefit.
Got it. So you would know before you paid for this study, my guess is the projections, or you'd have a pretty good idea that, yes, this makes sense. I'm going to pay this $3,000, $4,000, $5,000 potentially or more for the study because it looks like I could save, 10 to 20 times that potentially.
Exactly. We will not recommend to do this if the numbers don't make sense.
Got it.
And that's why we will look at the property first and see if it makes sense. A property bought for more than $1 million is usually going to get major benefits. Less than that, there still will be tax benefits there, and maybe I'll just segue into that, how the numbers break down and what the benefits are. We're not going to do it just because, a person may get $50,000 of tax benefits. It's not going to be super worthwhile to do.
Right. I see. What would you consider, is there a formula? What would you consider when, let's say someone contacts you guys and you go through the assessment, what's that number look like where before you think it makes sense for them to move forward? Is there a formula or a metrics that says, hey, it's this, I think we could get you this, so it makes sense, or it doesn't really make sense? Give us kind of a sense of that.
Sure. And really, it's all about the numbers when you're looking at taxes. And that's the numbers really are on an individual basis. For one person to get $100,000 of tax benefits would put them into a huge loss. And so it's not going to do anyone benefit. So there's no really reason to do it. For another person, doing a multiple property now, 19 shopping malls across the nation right now, the guy's looking at, over $40 million of tax benefits over the next 5 years. So he needs that because his income is so high, someone like that needs to knock down their tax liability. So it's really on a subjective basis. Okay.
So you make that analysis, let's see, it makes sense, and then you get the study out there, you move forward. How does your firm then play into this in terms of working with the client, and where does again, take us through that next step? Let's say they get the study.
Right.
And then where you go from there.
Right. So let's talk about what the study is exactly.
Okay.
Just to make clear for your listeners, because it still may sound like a little bit of French right now. What is this cost segregation? What's an engineer? I know what depreciation is. So let's just take a step back and discuss how the cost segregation works and what the job of the engineer will be to do. So the IRS, the Internal Revenue Code, breaks down property into several different categories of depreciation lives. So we already talked about the main structure of a building. It depreciates for residential, and that includes multifamily, over 27 and a half years.
Okay.
Commercial properties, and that includes everything besides residential, for a place where people live on a long-term basis. So that would also even include hotels. So anything, industrial, retail, shopping centers, you name it, office buildings, golf courses, nursing homes, hospitals, you name it, anything that is a property that's investment that's making money, business property, that's depreciated over 39 years.
Great.
Now, where cost segregation comes in is what's inside the building. So we're talking about fixtures, certain types of wiring, certain types of plumbing, special purpose lighting, appliances, electrical work, security systems, HVAC, all kinds of stuff that's inside the building, but it's not part of the physical structure of the building. Okay. That stuff depreciates over 5 years. So that means that you can take the value, and the engineer will come and assess all of those tiny details and apply them to the Internal Revenue Code where it says how fast this asset depreciates, and then take that total amount, say add all that up and tell you that all of the stuff that's inside the building depreciates over 5 years, will depreciate over 5 years. We'll add those numbers up, and you can add that to your depreciation schedule on your tax returns to get those deductions up front.
Okay, very good. Here's what we're going to do. We're going to take a quick break, even though we'll continue to live feed on Facebook. For those that are watching us on Facebook, stick with us. We're just going to take a quick 1-minute break. That's for our podcast programming. This is Joe Kuchera with Real Estate Radio Live. We have a call-in, a great guest, talking about cost segregation, Yonah Weiss, and he's going to stick with us. So stick with us. We're going to take a quick break. I'll be back with you in just a minute.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
Getting ready to buy or sell a home in 30, 60, or 90 days? Then check out BundleSelect.com to find out how you could save 20% or more on your entire transaction. Save on real estate, lending, and title. With BundleSelect.com, technology and a personal concierge are at your service to save you time and money. Bundle Select's hand-picked team of experts will compete for your business, so you'll save thousands of dollars by bundling all of these services. BundleSelect.com gives you all the control, including using your own realtor. I'm Joe Kuchera with Real Estate Radio Live, and I have been on the radio educating consumers for years. By bundling services like real estate, lending, and title, you could save tens of thousands of dollars. Act now, and this new model could save you money on your move, lower your interest rate, or cover your closing costs. Visit BundleSelect.com. That's BundleSelect.com.
The estimated minimum savings are based on a comparison with the national average. Individual results may vary, and the estimated savings are not guaranteed. Bundle Select Inc. is a licensed real estate broker. California Bureau of Real Estate Broker license number 004-66902.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live. Thank you for those that are tuning in and watching us on the Facebook Live. Be sure to download the podcast. For more information, you can always go to RERadiolive.com. Today we have a call-in guest, Mr. Yonah Weiss. He is talking about cost segregation, something fairly new. I've been in the real estate-related business for many years, and this is new to me. And I think there's a lot of different aspects that we don't know about, and this is one of those areas that he's kind enough to spend some time with us, spelling it out a little bit, and I like to really make sure that we're getting the details. So in the second segment here, Yonah, you kind of took us through the process, what it means. You got to go through it. You find a CPA, and then they do the assessment, and there's a cost associated with the study, and then you move forward. So kind of take us through the next steps. Let's say once the work's done, and let's say they realize that they're going to have a $150,000, $200,000 tax savings. So then, do you also? I'm assuming. Do you take that survey and that information and then work with a CPA that recognizes this and then resubmit, or you go through the tax? What's the next process after that?
Sure. It's pretty simple. Once we prepare the study, which as we mentioned before, for those just joining us now, the process of accelerating the depreciation. So we talked about a 5-year property inside the building, and we're about to start with a 15-year property outside the building. That's also landscaping, stuff like that. We'll get to. Once we assess those numbers, an engineer comes and applies all of that to the code, prepares a detailed study. We submit that and prepare a updated depreciation schedule. Instead of straight line depreciation, where you're just going to get one fraction of 39 or one fraction of 27.5 every year, straight down the line. So we'll make what happens columns into a few different columns of depreciation. So you're going to get 5-year depreciation. That stuff depreciates over 5 years. 15-year depreciation. That's, like we said, landscaping, and pavement, and fencing stuff outside the building. It depreciates over 5 years. And then the regular structure of the building. So your depreciation schedule, which we will prepare and submit that for the accountant just to simply submit that with the tax return. And once that's done, you have the study that holds up if it's done properly and done with the engineer according to the guidelines. It's actually something called the audit guide, the cost segregation audit guide that the IRS put out. If everything is done according to that, then you're in fair ground to submit that with your tax.
Got it. Before we move along, we just want to make sure I get out the information. Yonah, if someone's listening to the podcast, watching the show, they want to find out more about this, what's the best website, contact, email? What's the best place? How would people contact you?
You can find me on LinkedIn. That's a place where I'm very active. I post nearly daily much about cost segregation, just educating people. I've been on podcasts like yours. And you can reach me at my company, Madison Specs, one of the largest national companies doing this right now. We are located in Lakewood, New Jersey, but like I said, we have offices all around the country. And you can reach me directly at my email, yweiss, it's my name, first letter, last name, at Madison Spec. Maybe put that in the show notes. And yeah, feel free to reach out.
Very good, very good. So is this something also that you guys could do nationwide? I mean, does it matter if it's in California, Florida, Ohio? Does it matter?
Not at all. We've done, like I said, we have 12 engineers full-time on staff located in different places around the country. We work in all 50 states. We've done upwards of over 12,000 studies, 12,000 properties so far since 2006. And we're, doing, close to 2,000 studies this year alone.
Wow. Very good. Is there a better time, or when's the best time for one of these studies to be done? I mean, is it kind of an analysis where you could, typically you've been doing this long enough where you could say, hey, it should be, or you should wait, or now's a good time or not? How does that work? Yeah, typically a lot of, again, really the point where everything comes back to is one's individual, tax situation. Mm-hmm. So this is going to be a very subjective question. There isn't one blanket answer. What works for one person might not work for a second person. But generally speaking, a lot of people like to get this done right away in the first year of ownership. However, if someone is in a loss, let's say they bought a new building and it's vacant, they're not making income on it, and they don't have enough income on other properties, they're not going to get the benefit of accelerating depreciation, getting more depreciation deductions to lower their income tax when they don't have the income to begin with, to wipe out. Got it.
So the great thing about this is that you do not have to do it in the first year of ownership. You can actually go back and do it retroactively and claim those accelerated depreciation deductions retroactively.
Right.
So that's a great thing that a lot of people don't know about. They think I have to do it in the first year. I already made my depreciation schedule last year on my tax return. I don't want to open up my tax returns and amend anything. And the answer is you don't have to. You actually don't have to open up any tax returns. All you have to do is file. There's a form called 3115, 3115. This is a form you submit together with your tax returns that tells the IRS, I'm changing the way I'm depreciating this property. I was doing it straight line. Now I'm doing it in a segregated way, allocated way.
Great.
Yeah, it's great.
So give us kind of a flavor. Examples are always good. Do you have kind of a basis, Yonah, for average savings, and then maybe some savings that are just kind of took people off their feet? They said, wow, I can't believe I saved this much. Is there an average across the board? And give us some of the best success cases you've got there. Sure, absolutely. It really depends from type of property. There are some type of properties that are going to get more benefit than other, but typically speaking, about 10 to 30% of the value of the property can be cost segregated. That means that depreciation can be accelerated. So let's take an example. A building, it's worth $1 million. Okay, you bought a multifamily property. Let's say, I don't know how much is going for in Los Gatos these days, a 10 family. I don't know if they have that, but let's say $1 million, right? Yep. So you go ahead and do the cost segregation, and it turns out you're going to get 20% of the entire value of the property is going to get allocated to faster depreciation lives. That means $200,000 you're
you're going to be able to claim over the next 5 years.
Very good.
Extra. That means extra on top of what the regular depreciation that you're already going to take. The extra amount you're going to take is that. So that's amazing. Now think about a property that's worth $1 billion, right? And we've done a number of properties worth that. Talking about skyscrapers in Manhattan, we did an amazing multifamily property in San Francisco a couple of years back, over 2,000 units, a huge portfolio, and was worth $2 billion.
Wow. Amazing.
And that guy he was getting, hundreds of millions of dollars of extra tax benefits.
Wow. Before we go, just another thing, some people worry about red flags. Are you pushing the envelope? Is this something that throws red flags to the IRS, or is this just a standard practice if it's done correctly and people know what they're doing? It's no different than any other tax advantage.
Exactly. If it's done correctly, exactly what you said, Joe. If it's done correctly and it's done according to the rules, actually the IRS says that this is the recommended way to depreciate your property, to actually break it out into the proper lives. So yeah, if it's not done properly, you just want to guess and you don't have a study to back the numbers that you allocate, it's not going to raise red flags because it's a normal way to do things. But if one would get audited, they would for sure fail because they don't have the study to back it.
Very good. All right, one more time before we let you go, Yonah. This is great stuff. A lot of good information. I want to have you back in a couple of months, too, just to revisit. This is good. If someone wants to reach out and find out more about you, your firm, how they might be able to help, you might be able to help them. What's the best place to do that again? Yeah, you can reach me. You can find me on LinkedIn. I love that. That's the best place. Okay. I like to find people. And you can find me directly. My email is yweiss, first letter, my name, last name, at Madison Specs. That's our company. Madison, like the president, Specs is spelled SPECS, and that's actually an acronym for Specialized Property Engineering and Cost Segregation. So this is something we've been doing, like I said, for close to 13 years already and have become one of the premier companies in the nation. Very good. Yonah, thank you for your time. Great information. And again, we'll make sure we get this out to anybody and everybody. This is super, super valuable, I would think, to a lot of people. So I wish you all the best of luck, and we'll have you back in a couple of months for an update and a review. Thanks so much, Joe. And there really is a lot more. We could go on and on in different topics and kind of get a little more specific into detail. So I'd be happy to join you again. Yeah, well, maybe if there's more to that, we could break some more down. We'll get you some dates and have you back sooner than maybe first or second part of July. Okay, sounds good. All right, thanks again for your time, Yonah. I really appreciate it. All the best of luck to you. Take care of yourself. Okay, likewise. Thank you. Joe Kuchera with Real Estate Radio Live. Great guest, a lot of good information. This is something that, as you're listening to this podcast, remember to take down this information. If you know anybody with a commercial building, residential, that could benefit from this, I can't imagine why you wouldn't at least take a look and see if it makes sense. All right, unfortunately, we're out of time today. Thanks again. This is Joe Kuchera with Real Estate Radio Live. Thanks for those that are tuning in. Thanks for those that are following us on Facebook. And for those that are listening on the podcast, until next time, take care and have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.